Hello and welcome back to Explain the Charts. Today is October 31st, 2025, and we have some major news to cover for Apple stock, symbol Apple. Last night, after the market closed, Apple released its fiscal fourth quarter earnings report, and the reaction was dramatic. We're going to break down the news, analyze what the charts are telling us, and identify the key price levels you need to be watching. Let's start with the big headlines from the earnings report. Apple posted a solid beat on both revenue and earnings per share, bringing in $102.5 billion in revenue and $1.85 in EPS. Services revenue set a new all-time record at over $28.7 billion, which is a fantastic sign of their ecosystem's strength. Even more importantly, the company issued extremely strong guidance for the upcoming holiday quarter, forecasting total revenue to increase by 10 to 12% year-over-year, which is well above Wall Street's expectations. However, it wasn't all good news. iPhone revenue of $49 billion slightly missed estimates, and sales in the crucial China market saw a year-over-year decline. Despite these concerns, after an initial dip, the stock surged in after-hours trading, closing up around 5% near the $280 mark. Now, let's turn to the daily chart to put this price action into a longer-term context. As you can see, Apple has been in a strong uptrend for the past couple of months. A key event happened right here on October 20th, when the stock broke out of a long consolidation pattern. The breakout point was right around $260, a level that had acted as resistance for weeks. Following that breakout, we saw a powerful rally leading right into the earnings announcement yesterday, where the stock hit a new all-time high of $274.14 during the session before closing at $271.40. This breakout level at $260 is now our most critical long-term support zone. The price action shows that bulls were already in control before this earnings report even came out. Let's zoom in on this recent period to see the breakout more clearly. Here we can see the price action from the beginning of October through yesterday. Notice this period of consolidation where the price struggled to break above the $255 to $260 range. Then, on October 20th, we see this huge green candle on significant volume, confirming the breakout. The price never looked back, climbing steadily for the next week and a half. This established a clear bullish trend, and the earnings news seems to have just added fuel to the fire. Now let's switch to the 1-hour chart to analyze the price action right before the close yesterday. In the last few hours of trading on October 30th, we can see the stock pulled back from its record high of $274.14. This is typical pre-earnings behavior, as traders take profits and reduce risk ahead of a volatile event. The price found support and closed the session at $271.40. What's important here is the massive gap up we expect to see at today's open, based on the after-hours move to the $280 to $281 range. This creates a significant gap between yesterday's close and today's open, which often acts as a support area. The most revealing price action happened after the market closed, and we can see it clearly on the 15-minute chart. Here is the close of the regular session at 2000 hours Universal Time Coordinated. Just after, when the earnings were released, look at this massive volatility. We see an initial sharp drop, with the price plummeting to nearly $261. This was the market's knee-jerk reaction to the iPhone and China's sales miss. But then, within the next 30 minutes, buyers stepped in with incredible force. The stock reversed course and exploded upwards, rallying all the way to over $282. This V-shaped recovery is an incredibly bullish signal. It shows that once investors digested the full report, particularly the strong future guidance, they aggressively bought the dip, completely shrugging off the negative points. So, let's bring it all together and go back to the daily chart. What does this mean for Apple stock going forward? The bullish case is very strong. We have a confirmed technical breakout, positive earnings, phenomenal guidance, and a market that is eagerly buying the stock at all-time highs. The bearish case hinges on the weakness in China becoming a persistent problem or broader market headwinds appearing. Let's recap the key levels to watch. Immediate support is now at the previous all-time high of $274. Below that, the major support zone remains the breakout level around $260. To the upside, the after-hours high around $280 to $285 is the first area of resistance. Looking at analyst targets, many are raising their price targets to the $290 to $320 range, which will act as psychological targets. So, what are the likely scenarios? Given the powerful post-earnings reaction, I believe a continuation towards the $290 level is highly probable, perhaps with a 75% likelihood, as long as the market holds above yesterday's high of $274. A pullback to test that $274 level is also possible, and if it holds, it would be a very bullish sign for the next leg up. A failure to hold $274 would open the door for a deeper correction, but the chance of the stock falling below the critical $260 support in the near term seems low, maybe around a 25% probability, barring any new negative catalyst. What to watch for today is whether the opening gap holds. High volume on today's rally would further confirm this bullish momentum. Thank you for tuning in to explain the charts. Please remember, this video is for informational purposes only and is not financial advice. Always conduct your own research and due diligence before making any investment decisions.